The European bank turmoil remains. Even when we see a bounce, it is usually a low liquidity and certainly low volume bounce. So we have to be aware of the challenges that remain in the European banking system. There's a unique feature of the European banks that helps them recover capital very quickly, which is the issuance of convertible contingent bonds, the so-called CoCos. However, these convertible bonds are also a dangerous tool when the market is uncertain about the profitability and the strength of the balance sheet. We can see it here in the credit default swaps of European banks. Certainly, credit default swaps have risen. This is the credit default swap of Deutsche Bank, courtesy of Bloomberg. However, the vast majority are way below the levels of 2020, certainly way below the levels of the previous crisis. So, in general, the market perceives that the risk of default is relatively limited. On the other hand, the contingent convertible bonds can create an important negative domino effect on the equity because on the one hand, when the contingent convertible bond starts to rise and its yield goes way beyond what would be normal level, and in some cases there are CoCos with 18-19% yield, what happens is that the equity suffers because bondholders perceive that there could be a nearby conversion, and therefore they need to short the stock, or if it is converted, they would definitely sell that stock. And what could happen is that the convertible coming down leads the equity down further, and the equity leads the convertible down because capital is being eroded all the time, capital destruction. So think about this. The negative impact of constantly declining CoCo relative to equity and equity relative to CoCo, all of that can create an important negative effect if investors look at the stock and they think, what is the current market cap if those CoCos are converted to shares? And the unit value of those shares collapses, it could actually happen that the new shares plus the old shares at the new price of the stock makes a smaller market capitalization than prior to the conversion. Price is everything. Depends on how much the price of the stock falls. That is why it's so important for banks in Europe to continue to repurchase these convertible contingent bonds and to at least show the market that there is not a risk of that domino effect. Furthermore, in the case of some European banks, the issued convertible contingent bonds are almost 50% of the market cap of the bank. In the case of some of them, it's 50 to 67%. Most of them, the convertible contingent bonds is less than 17% of the market cap. So the risk of creating a domino effect that leads to a lower market cap than prior to the conversion is very low. But in those where the issuance is almost 50 or higher than the market cap, then certainly that can generate a significant risk. Therefore, what needs to happen is that these entities start repurchasing all of these bonds that they can to reduce that constant domino effect. The second thing that they need to do is to take strong provisions in their next earnings season to strengthen the balance sheet and to improve the perception that they're not hiding non-profitable, non-performing loans in the balance sheet. So provisions and repurchasing the CoCos are essential factors to stop the bleeding on banks that have been decimated dominated by negative rates and by massive monetary policy liquidity injections that have created the bubble of everything. Because what is happening is the burst of the bubble of everything. And that means that the asset base of banks gets diminished very, very quickly. So banks can accommodate the situation and they can strengthen in this situation, but they need to take urgent measures and not fall into the trap of believing that this time is different or that it's just a question of investors being insane. Investors are paying a lot of attention to that perverse negative impact of the convertible bonds with the equity.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.